Hello, this is Matt on the Moon Lambo channel, and it is my firm belief that XRP price volatility is a very good thing. It is a blessing, in fact. And I'm going to share with you why. But I think this is one of the most important things to understand for people that are holding any cryptocurrency, really. And it has to do with something that I've been focusing a bit on, but I want to flesh out the concepts why further in this video. But it has to do a lot with illiquid markets. And so there's this article here from A&B Crypto titled, "Here's Why Bitcoin's Distracting Volatility Actually Helps." Now, I want to be clear that I do not have a financial background, and I am not offering financial advice, so you absolutely should not buy or sell anything because of anything that I say or write. I'm just an enthusiast within the XRP community that likes talking about this stuff because it's fun to think about and share opinions, share ideas, and engage with the XRP community. But that is all it is. So I just want to be super duper clear on that so nobody thinks I'm someone that I'm not. I'm just a guy on the internet, okay? All right, but before we go any further, if you would please delicately tap that like button. I would definitely appreciate the support. And also, if you just so happen to be a fan of Ripple and XRP, you done came to the right spot, son. Go ahead and subscribe to the Moon Lambo channel to join the echo chamber. Was that a good echo? I don't know. You tell me in the comments below. All right, so let's dive in just right here in this piece. Okay, so Bitcoin's use cases have evolved quite a bit over the past decade. For many investors, the right amount of exposure to the crypto market and assets like Bitcoin can be extremely useful as a hedge, especially when compared to traditional assets like the S&P, gold, etc. Compared to the latter assets, Bitcoin has also been able to deliver fairly lucrative returns. Yeah, that's fairly lucrative? My gosh. Can you imagine if you were one of the lucky people that got to buy it at a penny? And even now, and it's nowhere near its all-time high, and it's still like $11,000 right now as I record this. Freaking insane. So fairly lucrative. I'm not so sure that does it justice. But anyway, piece continues. In fact, at the time of writing, Bitcoin was recording 53% in year-to-date returns, according to market data provided by Skew, in comparison to gold's 28%. And I would love to hear what your guys' perspective was. Like, some of you I understand are brand new to crypto, but for those that have been around for a while, whether it's a year or 2 or 3 or longer, I've been here almost 3 years. I can tell you, before I entered, or maybe right as I was entering and the world of crypto and seeing just how volatile it was, I couldn't make heads or tails of it, which is easy to understand. I hadn't done any research to that point, and I just sitting there wondering, like, well, what is it? Is it the case? And I didn't think that it was. I was just questioning. I was like, is it perhaps the case that this thing, it's so questionable as to the long-term viability of Bitcoin and the rest of the asset class? Is it so questionable as to whether or not there's something to this, and that's why the price keeps going way up and way down? Can the people almost not figure, or like, are we at any given moment on the brink of total collapse? Which is a fair question to ask, having done no research. And again, I didn't think that was it, because I don't form opinions until I do research, but I was questioning internally. I was like, Is it that simple? Is there more to it? And of course, that is not it. That absolutely is not the case. Even if you do a small amount of research, you can quickly see, and looking at the historical price action over the last decade, oh, absolutely that's not it. In fact, if that were the case, Bitcoin and this asset class would not have lasted nearly as long as it has. Because think about this, if that were the case, and there have been bubbles, of course, but those happen in every single asset class. Real estate, stocks, gold even. Just pick your asset. All of them have had bubbles. And so the fact that there's a bubble doesn't indicate that there's something Ponzi-ish about it or something wrong. And so, but the bubble, it's been fascinating over the last decade. It's inflated and then popped, drawing down, retracing like 90% at times. Like, how many times? I can't remember, 4, 5, 6 times. Like, that's crazy. That's crazy. Like, if there were actually nothing to it, and it were just a speculative bubble that should go away, like the tulip mania from hundreds of years ago, then it wouldn't continually reinflate and have higher lows with every single market cycle. So that should tell you right there, because if you don't get it why, even if you're like, but this Bitcoin thing doesn't make sense and crypto doesn't make sense, well, you might want to ask some more questions, because the data is telling you that the rest of the world that is in this disagrees with you, and there is something to it. So maybe be a little bit more curious to anybody that's a naysayer for the asset class as a whole, right? Anyway, the piece continues. A recent report by ARK Invest titled "Bitcoin as an Investment" touched upon how Bitcoin can help investors and their portfolios in terms of diversification, while also expanding on the role its volatile price movement can play. The report argued that contrary to popular opinion, one of Bitcoin's main strengths is its volatility. Can that be? Moon Lambo's been saying that for eternity? For as long as... Ever since I've learned it, I've been saying that when the topics come up. My gosh, we want the volatility. I understand it's bad when it goes down, and when your whole portfolio tanks 50, 60, 70%. I understand that. But then you get on the upside if you're a holder... like me, for example, and I jumped in November 2017. This is my first experience with crypto. It was nuts. I jumped in right before the parabolic run-up with XRP. I see the multiplier effect in how the upside is much more important to me, at least just me personally, compared to any potential downside. Because I'll tell you what, I could lose all of my crypto, life will go on, but if I'm right, then it can be life-changing, right? And so that's the general concept that I'm playing with here. And so you got to decide what your risk tolerance is, because I admit that all of this is highly risky, despite my level of confidence, which is very high. And I am very confident in XRP. I think that's pretty crystal clear at this point. But yeah, but let's not pretend that investing in an asset class with only 10 years of history isn't risky inherently. Of course it is. But that's okay to acknowledge. That doesn't mean that you're not confident in whatever you're holding. That's a totally different thing. But anyway, here's a quote. So they noted, many investors have resisted exposure to Bitcoin because of its volatility. While distracting, perhaps, Bitcoin's volatility actually highlights its uniqueness. And then the piece continues. While volatile swings in the market may see the price drop by substantial margins in a short period of time, it also ensures that the price action of an asset is not confined to periods of consolidation and sideways movement for too long. Market data from Skew has also illustrated how, in comparison to the likes of traditional assets, Bitcoin's one-year realized volatility continues to remain fairly high. Yeah, and it's still obviously very volatile, but it's been interesting to see that Bitcoin and the asset class as a whole, as time has progressed, has become less volatile. Which is not surprising. As more people and more money enters the space, what the heck do you think is going to happen, right? It just evens out. But the report went on to argue that one of the key benefits of having Bitcoin in one's portfolio revolves around its low correlation with traditional assets. While this property was questioned during the peak of the pandemic, the norm has yet again been established. It highlighted, quote, Bitcoin's mean correlation to the S&P 500 is roughly 0.03, and its mean correlation to gold is negative 0.004. For the most part, the correlations have ranged between negative 0.2 and 0.2, as shown below. The coronavirus spike in correlations was an exception, but 0.4 to 0.5 is only 40 to 50% of the near 100% correlations among stocks and equity markets over the same time period. Now, I find that fascinating because if I had to guess without having looked up the data, I would not have guessed that it would have been quite that uncorrelated. I would have thought that there would have been higher. To what degree, I don't know. I would have had to have thought about it more, and I would have made a fun guess. I'm not sure. But that number struck me as notably low. And so it's the same thing as like a correlation. It's a moving target though. It's sometimes even XRP relative to Bitcoin. Sometimes it's not very correlated at all, and it's the least correlated out of the top 10 cryptos. But sometimes it's more correlated. It actually does vary over time. But this, according to the findings of the report, minimizes idiosyncratic risks and lower overall volatility, which resulted in higher risk-adjusted returns for the portfolios that have exposure to Bitcoin. These factors, combined, stress on the need for investors to allocate a small portion of their portfolios to crypto assets, something that can also be extremely important for the larger crypto and digital assets market in the long run in terms of adoption. As of now, Bitcoin continues to be the go-to asset and one of the most robust hedges money can buy. And so, yeah, and look, as much as I tease Bitcoin, like, I am pro-Bitcoin. All right, just want to be super clear. Maybe I don't say it enough, but I actually legitimately am. It's just that I see XRP actually being used, and that's more interesting to me, certainly right now. I think that utility matters and will win the day ultimately. And also in terms of opportunity for, the multiplier effect when the parabolic rally comes, my gosh, how much money has to flow into Bitcoin to get it to double in price versus how much money has to flow into XRP to get it to double in price. And so my big play, and this is just for me, I'm not offering financial advice, I put the strong majority of my investments in the world of crypto into XRP for a reason. And it's a calculated risk. And if I'm wrong, then maybe I lose everything. But I could not be more confident, and I sleep super duper easy. It'd be weird to me if XRP never got back to all-time highs. But take a look at this. I went to Investopedia too, and they're really talking more so about stocks, but in terms of volatility. But it doesn't matter. It's the same thing here. So I wanted to share just a little bit before wrapping up the video here. Stock market volatility is arguably one of the most misunderstood concepts in investing. Simply put, volatility is the range of price change security experiences over a given period of time. If the price stays relatively stable, the security has low volatility. A highly volatile security hits new highs and lows quickly, moves erratically, and has rapid increases and dramatic falls. And so I do want to point out, if I could just emphasize this a little bit, I think this is super important, which is why I've been mentioning it a fair bit lately. I want to make sure as many people as possible hear this idea, and if you think I'm wrong, let me know. I love diversity of thought, but this idea of like what makes it possible, what is a primary driver of the reason it's possible to have these asymmetrical returns in the world of crypto. And I posit to you the primary driver of this is just the fact that the markets are so illiquid. It does not take much money to come in to double any crypto. And the lower cap the coin, the truer that is. And so you might think, well, why don't we just get into small cap? Well, because most of them, if not all of them, are garbage. And they're not going to ever get used. And I think they're going to go to the way of the dodo. So for me, taking a calculated risk, because I already think crypto's risky enough, at least I see XRP functionally being used today. And maybe that changes, and maybe that goes to zilch too. I'm willing to take that risk because I don't think it will. And I'm putting my money where my mouth is. So I'm willing to take on that level of high risk, but some of the small crap stuff, like there's too many coins out there for me to frickin' research. And so I decided what my risk tolerance is, and that this is it. this is I'm happy to be transparent about what I'm actually doing here. But anyway, they continue here. Because people tend to experience the pain of loss more acutely than the joy of gain, a volatile stock that moves up as often as it does down may still seem like an unnecessarily risky proposition. Look at this. And this goes to how humans behave. I'm going to have a whole separate video on that, actually, like human behavior coming up here soon. But my gosh, do you see this? And this is so true. Think about the emotions behind this. Feeling the pain of what's happening versus when it goes up, it doesn't feel quite as strong as the pain when it goes down there. And this is driving buying and selling decisions for all sorts of people. How about that? Then they write, however, what seasoned traders know that the average person may not is that market volatility actually provides numerous money-making opportunities for the patient investor. Investing is inherently about risk, but risk works both ways. Each trade carries with it the risk both of failure and of success. Without volatility, there is a lower risk of either. Bam! Can I read that sentence one more time? Each trade carries with it risk, both of failure and of success. Without volatility, there is a lower risk of either. Well, I don't know about you guys, but I'm not here to trade sideways forever. I know we've been doing that the last couple of weeks or so, but still, I'd like things to maybe pick up the pace a little bit here. So, volatility ultimately, in my opinion, is our friend. You know, if you think I'm wrong, change my mind, but why are you here then? Do you know what I mean? Like, why are you investing in crypto? My gosh. I'm all about it, man. That's it for this one, though. I am not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo!